Hello, all of you. I hope you all are doing good. In our previous session, we discussed about the format of profit and loss account. We solved some question on it. Now, today we will start with question number 8. I know that there are some questions are pending, like question number 7 and question number 5. I will cover it later, but first come to question number 8. Okay, come to question number 8. Now, here in these questions, we are going to prepare both balance sheet and profit and loss account. Okay, I hope you have done the homework. In our previous session I gave the homework question number 20. Okay, now come to question number 8. This question basically is in IC study material mock test paper May 25 and onwards, mock test paper number 6, mock test paper number 1 January 2025, and similar in RTP September 2025. Okay, the following is the trial balance of Omega Limited as on 31st of March 2012. So they give us the balance sheet here, rupees in 1000, land at cost 220, land at cost 220, then plant and machinery at cost 770, trade receivable 96, inventories 31st of March 2012 86, bank 20, adjusted purchase 320, factory expenses 60, administrative expenses 30. Selling expenses 30, debenture interest 20, interest dividend paid 18. Now here equity capital shares of rupees 10 each, 300, 10% debenture 200, general reserve 130. Profit and loss account 72, securities premium 40, sales 700, trade payable 52. Provision for depreciation 172, suspense account 4. What is this suspense account? I will discuss with you. And this additional information, the authorized share capital of the company is 40,000 shares of rupees 10 each. So here point number 1 is discussing about what is the share capital. So for reference we can write it down that here. Okay, for reference we can write it down. Just give me a minute. Okay, for reference we can write it down here. Share capital, point number 1. Okay, then we have the company on advice of the independent valuer wish to revalue the land at rupees 3,60,000. So point number 2 talking about the land PP. So you can see that here PP land is point number 2. Okay, now they say the declared dividend, final dividend at the rate 10% on 2nd of April 2012. So do you know, if you remember that we discussed in our previous session that now when they actually declared the dividend, it has to be recorded in that year. So it is declared on 2nd of April 2012. So what is going to happen? It will be recorded in the financial year 12-13. Okay, so only in the notes to account we have to declare that we have to mention that we have declared the dividend. That's it. But for the balance sheet of 31st March 2012, but where it is actually going to be recorded in next financial year. So this is new point, very interesting. Suspense account of rupees 4,000 represent cash received for the sale of the for some of the machinery on 1st of April 2011. The cost of the machinery was rupees 10,000 and the accumulated depreciation thereon being rupees 8,000. So this point number D belongs to suspense account. In detail I will discuss with you. Not A, B, C, D. I have written 1, 2, 3. Okay, no, it's A, B, C, D. Okay, A, B, suspense account, D. Okay, now here if I will discuss with you what is this point number D. Then point number E, depreciation is to be provided on plant and machinery at 10% on cost. So they are talking about depreciation on plant and machinery. Okay, so they ask us, you are required to prepare Omega's limited balance sheet as on 31st March 2012 and statement of profit and loss with notes to. Okay, so we have to prepare balance sheet and what? Profit and loss. So what we'll do that we will draw a format first and then I will discuss with you each and every point. But it is important to note that first of all which notes to account we have to prepare. So as such there is no so many adjustment here in these questions. So 4 we have to prepare share capital, reserve and surplus, long-term borrowing and PP, property, plant and equipment. Okay, but if you see that point number 1 talks about the, if I write it down which notes to account we have to prepare. So I will say share capital, then we prepare reserve and surplus, long-term borrowing and PP. These 4 are mandatory. So point number 1 talk about the share capital, we have already prepared. Point number 2 talk about the revaluation of land, that is PP. So we already prepared. Point number 3, C is basically going to come in notes. So and at the end we are going to write it on one note. Now point number D talks about the suspense account, but I will discuss that. but that is effect is going to come machinery, okay, depreciation, okay. So that also talk about the PP. Something about a suspense account they have mentioned. I will discuss with you. Very interesting point is suspense account. Okay. Then we have point number E talks about the depreciation that will come in PPE. So we have already prepared that. And one more thing in profit and loss account they ask, we can prepare on other expenses. Because as such there are no other transaction mentioned like the what we say inventory of the raw material different and the finished good WIP, nothing is mentioned that. So only one notes to account that here in profit and loss account also, that is other expense. Only total 5 notes to account we have to prepare. So we'll draw balance sheet, then we'll draw profit and loss account, and then we'll prepare what notes to account. So write down. Okay, write down there. Okay. Now question number 8. So question number 8, Omega Limited balance sheet is part 1. So part 1 balance sheet, write down their balance sheet as on 31st of March 2012, rupees in thousand. Okay, as they have given the figures in thousand, so we have to write it down rupees in thousand. Okay, we will also prepare the balance sheet in the same figures. Okay, now draw this for one page, and homework is must. Okay, please don't think so that you will do the homework later on. No. Whenever I give you the homework, generally after every session I give you homework that. Okay, I will give you homework. You must have to do that. Okay. Okay, write on note amount. Okay, note and amount. Now write down there equity and liability. Equity and liabilities. Shareholders fund. Share capital. Reserve and surplus. Non-current liability. Long-term borrowing. Long-term borrowings. Okay. Then here current liabilities. Current liabilities A, B, C, D and E. Short-term borrowing. Short-term borrowings. Trade payable. Other current liability. Other current liability. Okay. Then write down short-term provision. Short-term provision. Okay. 4 point only, no E. Then total here. Then asset. In asset here, write down a non-current asset. Non-current asset. Property, plant and equipment. Property, plant and equipment. Okay, property, plant and equipment. Then intangible. Non-current investment. Then here current asset. You write down there 5 points in current asset A, B, C, D, E. Inventories. trade receivable. Okay, inventories, trade receivable, cash and cash equivalent, then short term, loan and advances, then other current asset, other current asset. Okay, done. Now write down there notes to account number 1, share capital, reserve and surplus 2, long term borrowing 3, and property, plant and equipment fourth one. Simple. Okay, this is about the balance sheet. Now we'll draw here profit and loss account. So part 2, statement of profit and loss for the year ended 31st of March 2012, rupees in thousand. Okay, rupees in thousand. Oh, this is equal. Okay, now write it. Part 2, statement of profit and loss for the year ended 31st March 2012, rupees in thousand. Now here, draw this for half page. Note amount. First, revenue from operation. Then we have other income. Okay, here total revenue, expenses. We know that under expenses we have to write it on total 7 items. First, here write cost of material consumed, okay. Now purchases, then here opening stock of finished goods, or no, don't do just one thing. Change in inventory, not opening stock. Change in inventory, change in inventories of finished goods, work in progress, okay, of finished goods, work in progress, okay, and stock in trade, okay, and stock in trade, okay. Change in inventory of, what is change in inventory? Opening minus closing, okay. Then we will write it down. Have you written that cost of material consumed, purchase, change in inventory of finished goods, WIP, and stock in trade. Employee benefit expense, finance cost, depreciation and amortization, other expenses. Okay, now total here. Total expenses. Now here, fifth point, profit before tax. Profit before tax. Then Sixth is provision for tax. Provision for tax. Okay, then after that, profit after tax. Profit after tax. Now total. Okay, that is the profit before tax minus provision for tax. That will come with a profit after tax. Okay, and one more thing that here now, if you are coming after the graduation, most of the students I know that here in South they do C after graduation. Even though you are doing the C intermediate after your for clearing C foundation examination, I strongly recommend to go with the basics series. Okay, in the same here syllabus, you will find to one folder that here that is the basics of accounting. Okay, so try to watch that series also. The notes are already uploaded there. Okay, so try to watch that series. That will definitely help you to understanding the basic, and which is going to help for the purpose of to score the good marks in advanced accounting. Okay, now write down notes to account one by one. Notes to accounts. Notes to accounts number 1, share capital. Okay, keep the space of 6-7 lines. Okay, share capital, keep the space of 6-7 lines. Then here, reserve and surplus. Reserve and surplus, keep the space of 8-10 lines. Then here, third, long-term borrowing. Long-term borrowings. Okay. Then here keep the space of 3-4 lines. Then here, fourth, property, plant and equipment. Okay, property, plant and equipment. Okay, done. Now in property, plant and equipment, don't write like I'm going to say that opening. In some other way we have to do the presentation here of notes of number 4 PP. I will discuss with you. Okay, so now one by one we'll solve it. Go to balance sheet, go to trial balance which is given in question. Okay, okay. Now we have drawn balance sheet, P&L account, and all the notes to account. Now go to balance here, trial balance. Go to question that. Now first they have given the land. Where the land will come? PP. So there is one adjustment there. I know that we will discuss it later on that here, because that is the adjustment not just from the disclosure point of view. So generally when additional information is given from the disclosure point of view, like the issue of shares other than cash consideration or authorized capital like that we can do at the same time when we write it down these items. Okay, but there are some adjustment. It means we have to give the two effect. So better to first write it down the items, then go to the adjustment. Okay, now we have land at cost 220. So it will go to PP. We have prepared notes to account on PP. Notes to account number 4. Write down the land at cost. That is coming here. How much? 220. Okay, land at cost is how much? It is 220. Okay. Then we have plant and machinery 770. Plant and machinery 770. Okay, write down plant and inner column because there are some adjustment. Okay, this is also PP. What is plant and machinery at cost? It is at the original cost. Okay, now we have a trade receivable, so it will come in trade. There is no adjustment, so write it down in balance sheet trade receivable. So in balance sheet we can see that trade receivable, it is a current asset, so, and the amount is 96. So write down in trade receivable 96. Okay. Then we have here, now this is a very interesting point. Just listen carefully. What happened when they give you the figure of inventories? What they have write it down here? 31st of March 2012. What is the date of balance sheet? Date of balance sheet that we are preparing, that is also 31st of March 2012. And they have given you the closing stock here in trial balance. This is closing stock. So generally they don't give us the closing stock in trial balance. Where they give us the closing stock, they give us the closing stock in additional information. Okay. So when they give us the closing stock in additional information, what we do that? We write it down on asset side, and in change in inventory, we deduct it from there. We have to give the two effect. But here they have not mentioned this closing stock in additional information, not as an adjustment. It is given in trial balance. What does it mean if it is given in trial balance, this closing stock 86? It means that they have already passed the accounting entry of this closing stock. Point number one. Now listen carefully. Now what happened? First of all, we are not going to write it down the inventory at two places. It will come at one place only. Why it will come at one place only? Because it is appearing in trial balance. Now what happened if you go to the purchase, they have used our adjusted purchase. What do you mean by adjusted purchase? Basically means adjusted purchase is equals to opening stock, write down, okay, opening stock plus purchase minus closing stock. So adjusted purchase basically means opening stock plus purchase minus what? Closing stock. Okay, now understand this one. What happened is that here, this is the formula for the adjusted purchase. But generally what happened, they give you the purchase figure separately, but they have not given the purchase figure separately. And we cannot find it out also how much is the purchase we have. You will tell me why, sir. The reason is that here now, because if they give us the adjusted purchase, we know the closing stock, but we don't know how much is the opening stock, how much is the amount. If we know the amount of opening stock, then we can find it out that purchase as a balancing figure by this equation. But they have not given us the opening stock. So we'll write it down as adjusted purchase. So when they tell you the adjusted purchase, remember one thing, they have already done the adjustment of change in inventory, opening minus closing. Why I'm saying, if you see here, what is the formula of adjusted purchase? Opening stock plus purchase minus closing stock. So basically they have opening minus closing. They have already done it. They have already done it they have already done it. But I cannot find it out how much is the amount of change in inventory, but which is already adjusted. Change in inventory already adjusted. So when I say the change in inventory already adjusted, why I'm saying the change in inventory already adjusted here? Because they have given the adjusted purchase, that is opening plus purchase minus closing. So opening minus closing already adjusted here in this adjusted purchase amount. Okay, but in my P&L account, I cannot write it down here in this question, change in inventory. That I cannot write it down because I don't know how much is the change in inventory. But that does not mean that we have not given the effect of change in inventory. They have already, when we will write it down here, purchase, we will write it down, write down in bracket in purchase, adjusted, which is important. Write it down there, adjusted. Adjusted means that here, what do you mean by adjusted? Adjusted means that here, this is opening, okay, opening plus purchase minus closing stock. Adjusted purchase means that here, opening stock plus purchase, right? Opening stock. Okay, don't just write opening, otherwise you might get confused later. Opening stock plus purchase minus closing stock. Okay, so already this opening, already these two things, opening minus closing already adjusted there. Okay, so as but we don't know how much it is. We know it is adjusted, but we don't know how much it is. Okay, so we cannot write it down in change in inventory. We have to write it, but we cannot. The reason is that because we don't know how much it is, that because the information is not given in question. Okay, now here this closing stock will come in balance sheet directly, balance sheet. Okay, it will come in balance sheet. How much it is that here now? 86. We'll write it down adjusted purchase, don't worry. Okay, let's write it down adjusted purchase also. That is how much? 320. So here you will write it down here, 320. How much is adjusted purchase? That is coming, how much is 320? Okay, 320. Okay, done. Then we have here is the inventories. Inventories, how much is 86? Okay, so go to balance sheet here now. Go to balance sheet, write down inventories 86. Okay, 86. Okay, then we have here is bank. Where the bank will come? Bank will come in cash and cash equivalent. Okay, 20. So write down in balance sheet cash and cash equivalent how much it is? 20. Write down there 20. Okay. Then adjusted purchase, it will come in P&L account. We have already written there is adjusted purchase. Okay. Now factory expense. Do we have any separate heading for the factory expense? No. If there is no separate heading for factory expenses, it will come as what? Other expenses. So write down in other expenses that here now, notes to account number 5. Oh, we have not. Okay. Just after in PP, keep the PP that here notes to account for around 10 lines because there are some adjustment. I will do it in the inner column. So let's say here notes to account number 5th. Notes to account number 5th. that is what other expenses. Other expenses, that is. Now write on the factory expenses. Factory expenses. Okay. How much is the factory expenses? 60. So write down this 60. Okay. Then we have here is administrative expenses. There is no separate heading for it, so it will come in other expenses 30. So administrative expenses 30. Then we have selling expenses is what? Other expenses, that is 30. No separate heading, so it will also come under other expenses. Okay, selling expenses. Selling expenses. That is how much? 30. So write down there 30. Okay. Then we have here debenture interest. So it will come under finance cost 20. So write down in notes to in the P&L account, if debenture under the finance cost also you can mention like debenture interest. If you want, you can also make a notes to account on it also, no problem. Debenture interest 20. So write down there 20. Okay. Then we have, this is interesting and this is new for you. When I say interim dividend paid or any dividend paid that year, we don't write it down in P&L account. Okay. What we do, we deduct in reserve and surplus. So schedule 3 says that when you pay dividend, when you paid the dividend, we don't have to show as an expenses in P&L account, because payment of dividend is basically a appropriation of profit. What do we mean by appropriation of profit? That here we are distributing the portion of profit to the owners. Obviously shareholders are the owners of the company. So to whom we give the dividend? We give the dividend to the shareholders, my dear student. So what we are doing that here now, that we are giving to the shareholders. So we are giving to the owner. It's an appropriation of what? Profit. So what is going to happen when I say it is an appropriation of profit? Where it will come? Schedule 3 say don't write it down in P&L account. Instead, it shows as a deduction from a profit in reserve and surplus. Okay. That is 18 here. So what we'll do that here now, we have is general reserve P&L account. Okay. Do one thing. Go to notes to account number 2. Write down there. Okay, because we have general reserve also. Let me write this general reserve also. That is how 130, one by one. Write down the general reserve. General reserve. That is how much here? 130. Okay. Then we have here profit and loss account 72. Profit and loss, write down in 72. Okay. Now what we'll do that later on when we'll find it out the profit for the current year. So this is basically opening balance. Okay, opening balance. Then we'll find it out the profit for the current year. Add profit for the year. Profit for the year. Then we'll do it what? Total year. Then we'll deduct less appropriation for interim dividend, or you can say interim dividend paid, or you can also that appropriation. Appropriation means distribution of profit. Appropriation. Give the heading appropriation, and under appropriation we'll write it on interim dividend. Interim dividend. Okay. So we'll write it down in an outer column later on when we find it out the profit for the current year as well. Okay. Appropriation means the distribution we are doing that. Okay. So how much dividend we have paid? 18. So that is going to be deducted from reserve and surplus instead of showing it P&L account as per schedule 3. Okay. Then we have here, it will deduct from reserve. Okay. Now equity share capital is 300, but information is given in point number 1 that we have 40,000 shares of rupees 10. That is authorized capital. Okay. And the share capital rupees in 1000, that is a 300, basically that is 3 lakhs. It means 30,000 shares of rupees 10 each. So go to share capital it will come. Okay, write down in share capital. Okay, share capital, notes to account number 1, authorized capital 40,000 equity shares of rupees 10 each. 400 because we are writing down rupees in thousand. Basically 40,000 multiplied by 10 when you will do it will come 4 lakh, but we will write it down all figures in thousand. Now here issued, subscribed and paid up capital, and we can say called up. Okay, now write down there 30,000 equity shares of rupees 10 each. Okay, of rupees 10 each. Okay, how much it will come? 300. Okay, simple. Now done, have you written? Okay, now come to trial balance again. It says 10% debenture. It's a long-term borrowing. So write down in long-term borrowing 200, 10% debenture. Notes to account number 3. So 10% debentures. 10% debentures. How much it is? 200. Okay. Then we have here is general reserve will come under reserve and surplus. Profit and loss account will also come under reserve and surplus. Security premium, we have to write it down in reserve and surplus. We have not yet written 40. So write down in reserve and surplus securities premium. Securities premium. Securities premium is how much here? 40. Okay. Then we have here sales will come revenue from operation, profit and loss 700. So revenue from operation 700, you will write it down. Okay, simple it is. Then we have here is trade payable. Trade payable will come in trade payable balance sheet. Okay, liability 52. So in balance sheet trade payable it will come 52. Okay, write it down there 52. Okay. Then we have here provision for depreciation. Now please understand this point here. These 2 points are basically connected to each other. When I say plant and machinery at cost and provision for depreciation, why I'm saying they're connected to each other? Basically in trial balance, they have given the original cost, but depreciation is not deducted from the plant and machinery. They have made a separate account. What does it mean? That if you have ever done the accounting of depreciation, you should know that when we do the accounting of depreciation, there are 2 ways to form the entry. One is what? To pass the journal entry of depreciation, we pass entry depreciation account debited. What entry do we pass? We pass the entry depreciation account is debited and property, plant and equipment account is credited. Here in our example, plant and machinery. So one way is that, okay, let me write it down for your reference. When I pass the entry for depreciation, I have 2 options. So both are correct and the effect will be same. The first is I can pass the entry depreciation account debit to asset account. Asset means that PP account, or we can pass the entry depreciation account debit here to provision for depreciation account. So we have 2 options, either to pass the entry depreciation account debit to asset account and depreciation account debit to provision for depreciation. Okay, both are correct. Okay, or both are correct. Okay, both are correct. But here in the, if you credit to asset account, the value of the asset goes on and WDV will appear in trial balance. But if you credit to provision for depreciation, so asset will be as it is at original cost only. Okay, but you create a new account provision for depreciation. So we don't show this provision as a short-term provision, okay, or any other provision on liability side. Basically, this provision we deduct from PPE. So we don't show this provision for depreciation as deduction. We don't show this provision for depreciation as a provision under short-term provision or any other provision on liability side. But what we do that, this provision for depreciation basically we show as a deduction from PP. Let me tell you what is the logic. Some of you know, no, sir, we have prepared so many provision for depreciation, that provision for tax, you write it down under the short-term provision. Why you don't write it down this provision for depreciation in short-term provision? You know that here, when we will cover the last topic of a C intermediate, that is accounting standard 29, I take provision, contingent liability, contingent asset. So if you go to the definition of provision basically means there should be some probable outflow. By definition, as per the accounting standard, provision means there is some probable outflow. Outflow is going to happen. Outflow means some payment we are liable to do some payment in future. So these, when we credit to provision for depreciation, there is no probable outflow. Whether we are going to pay for the provision for depreciation in future, no. So this provision for depreciation, it's a custom. Okay, in accounting, it's a custom. People call it a provision for depreciation, but actually by definition, it is not provision. Because if we go to the, just for your knowledge, I'm saying, okay, don't take it serious. Just listen me carefully. Okay. Now, no need to write it down anything. Just listen me what I'm saying to you. Yeah, I'm talking to you. Just listen me carefully. So what happened with a provision for depreciation means basically we are creating a provision. We are creating a provision for what? Depreciation. But there is no probable outflow. So by definition we call it provision, but actually, we call it provision, but by definition it is not provision. Okay, I'm repeating again. By definition it is not provision. Okay, because there is no probable outflow, but there is a custom, we call it provision for depreciation. It's okay, provision for depreciation. As it is not a provision because there is no probable outflow here, so we don't show as a short-term provision on liability side, but we show as a deduction from the PP. So basically, original cost, we write it down, whatever the original cost of property, plant and equipment, and whatever accumulated depreciation is also, we call them a provision for depreciation, that we show as a deduction. You got the point? Okay. So here we have here 172. So there are some adjustment in it. I will discuss with you, but write it down here. Write it down here. Okay. Here, go to notes to account number 4. Here after PP, keep the space of 4 lines. Then write down here less provision for depreciation. Write down inner column because there are some adjustment in it. How much is the amount? 172. Correct. 172 is the amount. Yes. Provision for depreciation is how much? 172. Now this suspense account is very interesting. I'm going to discuss with you in detail. Okay. So time being, keep the suspense account. Okay. Highlighted that here and keep the suspense account pending. I will discuss with you in detail later on that. Obviously in question only, but at the end I will discuss it in detail. So we have not write it down this suspense account anywhere. So what I am doing that now, for your just time being, I will say this is my suspense account. This is my suspense account. Okay. So this is suspense account. And we have credited to suspense account. Okay. Balance, which is given in trial balance. You can write it down. Balance in bracket TV, that is trial balance 4. So in our financial statement, we have not yet write it down at any place. So whether we have write it down at any place, the answer is no. We have not yet write it down at any place. We'll discuss in detail when the suspense account point will come. But I will tell you why we have not yet write it down and how we are going to give the treatment of it. Okay. Now here, now except the suspense account, all the item of trial balance we have already written there. Okay. Now come to additional information. So point number A, that is authorized share capital of the company is rupees 40,000, shares of rupees 10. We have already written it. So this point is related to share capital. We have already mentioned in notes to account number 1. Point number 2 is related to PPE. What it says, the company on the advice of the independent valuer wish to revalue the land at rupees 3,60,000. Now understand, this is new for you. What happened? This is accounting standard 10 that we'll discuss later on. Okay, but accounting standard 10 basically give us the permission to increase the value, decrease the value of the asset. What does it mean? Suppose if I say that I have, as they have given the example here in the question, they have mentioned the land here. So we have land, suppose, and the land, suppose how much is the value of the land which is appearing in my books of account? That is coming 220. Okay, that is a 2,20,000. But they want me to revalue 3,60,000. So what does it mean that here now? This is the land we have. Okay, this is the land we have, and which is appearing in my books of account at 220,000. How much it is? 220,000. Okay, but if the market value of that asset is 3,60,000, how much is the value which is appearing in my books of account? 2,20,000. Okay, I have written here 2,20,000. So how much is the value which is appearing in my books of account, which is coming to 20,000? But they want to do the revaluation at 3,60,000. Is it allowed to do that? I mean to say, in our books of account, the value which might be we have purchased at 2,20,000, but later on the market value increases. It might be happen in case of land, the value increases that here. Now the value of the land in the market is 3,60,000. So can I say that, can I increase the value in the books of account? The answer is yes. It is allowed to do that as per accounting standard 10. But don't worry, what other thing AS talks about, AS 10, we'll discuss it there. But here it is, understand timing, just we have to know that yes, we can increase the value of that. Even in fact, we can do the decrease the value of that as well. Okay. But we'll discuss in AS 10 their detailed accounting of that. But here I'm talking about, can we increase the value from 2,20,000 which is given in trial balance to 3,60,000? Yes. So it means we are increasing the value. We are increasing the value by how much here? If you take the difference here, 3,60,000 minus 2,20,000, that is coming 1,40,000. So can I increase the value by 1,40,000? Can I increase the value by 1,40,000? The answer is yes, we can increase the value. But now the question is, what should be the accounting treatment? Now go to the basics of accounting. You are increasing the value from 2,20,000 to 3,60,000. What we are doing? We are increasing the value from 2,20,000 to 3,60,000. We are increasing by 1,40,000. Increase in assets should be debited. So I will debit to PP account will be debited by 1,40,000. Okay, PP account will be debited by 1,40,000. Just give me a minute. Okay, PP account will be debited by 1,40,000. This is first effect. But can I credit to cash account? Can I say cash or bank account should be credited? The answer is no, we cannot credit cash or bank account because actually we are not paying for it. The value, the book value is 2,20,000. The market value is 3,60,000. The value is increasing by 1,40,000. The value is increasing by 1,40,000. That does not mean that, okay, that does not mean that actually we are not paying. We are just passing the entry to we'll recording at the market value fair value in the books of account. That's why we are increasing by 1,40,000. But what should be the second effect? Because increase in assets should be debited. So we debited to PP account was debited by how much? 1,40,000. Okay, PP account is debited by 1,40,000 that now. And which account should be credited here? We have to credit to, we cannot credit to cash or bank account because we have not paid the amount. We have not paid the cash or bank payment here. Okay. So which account should be credited here? We are going to credit to account. We call them revaluation reserve account. What we call them? Revaluation reserve account. Write down in your book, revaluation reserve account by 1,40,000. Okay, so we cannot credit it. It's a gain because we are increasing the value from increasing the value of the assets. It's benefit. So increasing the value of asset from 220 to 360, we are increasing by how much here? 1,40,000. So when I say we are increasing by 1,40,000, what is going to happen? PP account should be debited and revaluation reserve should be credited. If you are paying that, then we can say cash or bank account should be credited. So we'll increase the value of land by 140 and remaining, and the second effect of 140 will go to revaluation surplus, that is reserve and surplus. You got the point here? Okay. Now go to here, notes to account number 4 in land, add here. And when we increase the value, we call it upward revaluation. We call it upward. Okay. So write down upward revaluation. Upward revaluation. How much is the upward revaluation? That is 140. So 220 plus 140, that will come 360. Or they have mentioned to come at 360. Obviously, we have to increase by 140. If you want, you can write it down like 360 minus 220. That is 140. The first effect 140. Second effect will come under reserve and surplus. Write down your revaluation. Reserve. 360 minus 220, that is coming how much? 140. Okay, 140. Okay, done. Now we have done with the point number B. Now C, they say basically when they declare the dividend 2nd of April, so it will not record it on 31st of March balance. It will record in the next year books of account. Just we have to mention in a note. So what we'll do that we have prepared note number 5, that is other expenses. After that, you can write it down. Keep the space of just 2-3 lines after notes to account number 5. Then write it down. One note there. So write down one note. Okay. The final dividend. The final dividend will not be recognized as a liability at the balance sheet date, at the balance sheet date, even if it is declared after the balance sheet date, but before the approval of the financial statement. Before the approval of the financial statement. Write down this. Do you remember this? We discussed this adjustment. I think it came earlier. Yes or no? Oh, yes. Remember the right this. Okay. Dividend declared. The dividend declared after the balance sheet date, but before the approval are not recognized on the balance sheet date that. Okay. Same thing what I'm writing here. Now, okay. Write down here. Okay, the final dividend will not be recognized as liability at the balance sheet date, even if it is declared after the balance sheet date, but before the approval of the financial statement. That okay, after the balance sheet date, for your reference, you can write it down. Balance sheet date basically 31st of March 2012 in our case. Okay, okay, they will only be recognized. Write down that they will only be recognized. They will only be recognized when approval in subsequent period, that is, you can write in subsequent period, that is next financial year 2012-13, and their disclosure will be made in the notes for the current year. Write in bracket, that is 2011-12. Okay, 2011-12 as per accounting standard. So I told you in previous session which accounting standard says as per accounting standard, basically that is AS4. Okay, so we don't record it that here. Okay, on here in we just mention in notes, that is notes. We don't record, we just disclose in notes. Okay, done. Have you written this? Okay, now come here. The point number D, and this is new. You just have to listen very carefully. Okay, now what I will do that here now. Let me first read it. This is suspense account of rupees 4,000 represent cash received for the sale of some of the machinery on 1st of April 2011. So at the starting of the year, they sold some of the machinery. Okay, they sold some of the machinery. When at the starting of the year, remember the date, on 1st of April 2011, they sold some of the machinery. So when I say they sold some of the machinery, that now, okay, at the starting of the year, so the cost of the machinery was rupees how much here? Is 10,000. How much is the cost? 10,000. But they say the machinery they sold, they are saying the cost of the machinery is rupees how much? 10,000. And the accumulated depreciation thereon being rupees how much? 8,000. So they are telling us that now what is the original cost of is 10,000. How much depreciation they have charged on that till date when they sold it, till that date, how much depreciation they charge? 8,000. So they say suspense account of rupees 4,000 represent the cash received for some of the machinery. What is suspense account? I will come to that. Okay, what is suspense account? And they have done some error in the question. Okay, not, I mean to say intentionally. I mean to say the suspense account that they have mentioned that here now is when they have they have mentioned it that here that they have some mistakes that we have to rectify that here. Okay, so to say it correctly, intentionally that they have done it, and we are going to rectify that. We are going to correct it. I will mention it, don't worry. One by one. Do one thing, it will be easy for you to understand. Write down working note. Write down here below the note this working note. Write down their working note. Okay. Then write down your working note number 1, which is profit on, okay, profit or loss on sale of plant and machinery. Date is on 1st of April 2011. So they sold it at the starting of the year, 1st of April 2011. Now please understand this here. What is the cost of machinery? What is the cost of the machinery? They sold 10,000. So write down cost of machinery is how much here? 10,000. Okay. Then let's, till that date, how much depreciation they charge? They call it accumulated depreciation. How much it was? 10,000. Okay. So here we have WDV. WDV means written down value, or the book value, you can say, or written down. What is the value on that date? So you can say written down value, WDV, on 1st of April 2011. What is the WDV? 2000. Okay. So the original cost was 10,000. The depreciation that we charge on it till date was 8,000. So WDV, how much is the value? 2,000. But we say sold it at what price? Sale value is how much? 4,000. So the sale value is 4,000 and the WDV was 2,000. So we made a profit of how much? 2,000. So write it down here. So the book value is the written down value of that asset was 2,000. We sold at 4,000. So we make a profit of 2,000. So profit on sale of plant and machinery. How much is the profit? We have 2,000 because we sold at 4,000. What is the value? 2,000. So this profit is coming how much? 2. 4 minus 2, that is coming how much? 2,000. Okay. Now this profit will come under the category of other income. I will mention it that it will come under other income. We'll write it on it on other income. But something else, we'll write it down is in other income that. Okay. So, but here something else that I want to talk to you. Okay. Just listen carefully. Okay. Now, if I say that here is the concept of the rectification, but I'm discussing with you in detail. So in rectification of errors, basically when we have done certain errors, so we have to rectify them. We have to correct them. So when I teach them, I have approached that here now. Directly, I will not come to the rectified entry. Rectified entry means the entry which we are passing to correct the error that we have done. Okay. But what is the correct entry? Then I write it down, the effect given. Effect given means the wrong entry that they have passed. And then we pass here the rectified entry. Rectified entry. Then we pass what? Then we pass a rectified entry here. Okay. Now understand this point here. Okay. What does it mean that when I say the correct entry? Listen carefully. They tell us that here now, the suspense account of rupees 4,000 represent the cash received for the sale of some of the machinery. So basically the correct entry, when you sell the machinery, you receive 4,000 that year. Okay. So cash account should be debited. And what is the correct entry? When you sell the machinery, so cash or bank account should be debited. Okay. That is 4,000. But when you sell the machinery, plant and machinery, what is the written down value of plant and machinery? It was 2,000. So how much the profit we have? Profit on sale. How much was the profit on sale? It was 2,000. It will come in profit and loss. Now please understand that here. They say bank account should be debited by how much here? 4,000. So we debited the bank account by 4,000. We credited here the plant and machinery by 2,000. Okay. And then we credited a profit on sale because we sell it at what? 4,000. But what is the WDV of that? It was 2,000. And how much the profit we have? The 2,000. This is the correct entry they should pass. Okay. But you know what they have done? They say that a suspense account of rupees 4,000 represents the cash received for the sale of some of the machinery on 1st of April. So they are saying is basically 4,000 is the suspense account on the sale of machinery. So they pass the wrong entry. What the effect that they have given, the incorrect entry that they have passed cash or bank account should be debited by 4,000, but incorrectly they have credited to account and they call it a suspense account. So when they credited to suspense account, what happened is that it's an incorrect treatment. They should have to pass this entry. They should have to pass this entry. But what they have done, they should have to pass this entry. But they have passed actually this entry. So we have to rectify it. So we are going to give the effect of rectified entry. So how to pass a rectified entry? We have to do the comparison of correct entry and the wrong entry. Wrong entry means the effect given. Okay. So correct entry and what is the effect that they have given incorrectly. We have to compare that and we have to pass the rectified entry now to correct the treatment. Okay. I said that here the bank account should be debited and they have debited the bank account. So there is no problem in that. What I'm saying, the bank account should be debited and they have debited the bank account. There is no problem in that with the same amount. But I say the plant and machinery should be credited, but they have not credited plant and machinery. So I'm going to credit to plant and machinery account should be credited by 2,000 because they have not credited plant and machinery. And they have to credit to profit on sale. So they have not credited this profit on sale. That will go to penal account as other income. So they have to credit it because they have not credited. So they have not credited this plant and machinery and profit on sale. That's why we have to credit it. Now they have not credited. So we have to this. Okay. They have debited the bank account here and they should debit the bank account and they have debited the bank account. So it is perfectly correct. But they have to credit to plant and machinery account. They have to credit the profit on sale of 2,000. But they have not credited, so we have to credit it. We have to correct it. But you know what they have done that here now? They have credited to the suspense account and they should not do it. Something which we have credited and that we should not do it to cancel it. We have to cancel it. And to cancel it, we have to debit them. Okay. My intention, dear student, to give you the in-depth knowledge. I will not come here and I will tell you do this, do that. No, I will go to the in-depth and then I will teach you there. I say that here now. The suspense account basically they credited the suspense account, but it should not be credited. This is the incorrect entry that the effect given means incorrect entry. For your reference, you can write it down. It's an incorrect entry. Incorrect entry that they have passed. Okay, incorrect entry that they have passed. So what happened is that here now bank account should be debited by 4,000, but they have credited the suspense account by what? The 4,000. It's an incorrect entry. What happened is that here now when I say the incorrect entry, the suspense account should not be credited. So to cancel it, we have to debit them. Something which we have credited, to cancel it, we have to debit them. So I will debit to suspense account here. Suspense account should be debited here by how much here? 4,000. This is the entry we have to pass it. This is the entry we have to pass it. Now please understand. Here you draw a suspense account. Let me take it there. Okay, we have draw a suspense account. Okay. So when I say we have draw, this is a suspense account. Okay, now this is a suspense account. Okay, now understand this point. So what I will do that here now, this suspense account, I will debit here, correct? So I will debit here this suspense account by this 4,000. So my suspense account will get closed. So these 4 which we have recorded from the trial balance. From where we recorded these 4? From the trial balance. So these 4 we recorded from the trial balance that now, and we debited the suspense account while we are passing the rectified entry. So my suspense account get closed. Therefore, we are not going to write it down the suspense account in our financial statement, in balance sheet and profit and loss account, because that suspense account get closed here. So we debited the suspense account. Oh, sorry, we credited the suspense account here. This is a balance which is given in trial balance. And while we are passing the rectified entry, we debited the suspense account by how much? The 4. So what happened here? Our suspense account get closed here. You got the point here? Okay. So we are not going to write it on suspense account in trial balance, and always try to go to these basics of accounting. Then only you will understand that. Okay. Now, second effect that will give that this here we have debited here. Now these P&L account which should be credited. So we have to reduce the the plant and machinery. Okay. And this will write it down as what? Other income. Okay, it will go under, where it will go? It will show as other income. So one by one. So we have debited this suspense account. Go to plant and machinery, notes to account number 4. Now we will notes to account number 4. You can see that plant and machinery less. Write down there disposed of. Okay, disposed of. Write down in bracket only these two. I tell you why. Just write in bracket. That rupees in thousand. That's why I'm writing just 2 here. It's a 2000. Okay. Now what we'll do this. What about these two? It will go as an other income. So go to P&L. We have not made a notes to account on other income. So we'll go to P&L account directly. We'll write it down as what? Other income. Here you can mention that the other income as profit on sale of plant and machinery. Working note number 1 also. We have calculated the amount there too. You got the point here? Okay. So we have given the effect of all these items. Okay. This rectified entry, this is what we have to pass. Now, one more thing that I want to discuss with you that here now, that is related to the depreciation accounting. Okay. That is related to depreciation accounting. Now, just listen me carefully. Okay. Now, understand this point. What it says that here now, okay, what it says that here, when it's come to the here, when it's come to the other part here, we have discussed about that rectified entry we have passed. But remember that if we have maintained a provision for depreciation account, we also call them accumulated depreciation account. So whenever we sold any asset, the accumulated depreciation account has to be transferred to that particular asset account. So for your reference that here now, just write it down like this that here, at the time of sale, write it down that at the time of sale of plant and machinery, you have to pass one entry. We have to cancel the provision for depreciation account only that much that we have for that particular asset. So the asset which we sold, how much is the accumulated depreciation on that? 8,000. So we have to cancel the provision for depreciation by 8,000 and plant and machinery we have to cancel by 8,000. So to make it simple right now, what entry we have to pass it in when we will prepare the balance sheet, in both the cases I will going to deduct this from the provision for depreciation and plant and machinery. But if you go to the accounting entry, provision for depreciation has credit balance that time. To cancel it, we have to debit them. Plant and machinery is asset has debit balance. To cancel them, we have to credit them. So we are going to pass the entry here. Provision for depreciation account should be debited here 8,000, and plant and machinery account should be credited here by how much here? By 8,000. So we debited the provision for depreciation account by 8,000 and plant and machinery account should be credited by 8,000. Basically, we have to cancel whenever we sell any asset. If we maintain a provision for depreciation, whatever depreciation we have charged on that asset which we are selling, that has to be cancelled from the provision for depreciation, and we have to cancel we have to transfer to the plant and machinery. Okay. So go here, notes to account number 4. So what happened here? We will deduct this 8. You can see that provision for depreciation account, we are going to deduct this 8 from here. Okay. And then we are going to deduct from the PP also. But here in a dispose of, you can add here 8 and total we can show as a deduction here 10. Okay. Same thing. First we have to deduct these 2, then 8. So total 10 we will deduct it. 2 plus 8 will deduct directly the 10. Or you can show separately also 2 deduct and then 8 deduct. Okay. This is the new adjustment that we have here in this question. Another thing is simple. Okay. Now if I say that, okay, now understand this one. If I say that here now, how much is the total that it is coming of the asset here now, which is just 760. Now please go to the basics of accounting. Now if I prepare a plant and machinery account, this is plant and machinery account. This is plant and machinery account. So how much is the balance that we have a plant and machinery? That is how much is the balance is 770. How much is the balance that we have here is the 770. Okay. Now we credited in our entry. If you remember, we credited a plant and machinery by 2 and here we credited by 8. So if you write it down here, the 2, then 8, you know how much balance is going to come? The balance will come, how much here is 760. How much balance will come? 760. The 770 is the opening balance. We credited it in our journal entry by 2 and 8. You can see the 760 here. You can see the 760. Always try to connect with the basics of accounting. If I say that here now provision for depreciation account is a credit balance. So if I write it down here, a provision for depreciation account, okay, provision for depreciation account, that okay. So how much balance? Opening balance is given. The opening balance is given 172. Okay, 172 opening balance is given. This 172. In our entry that year, we have debited to provision for depreciation account by how much? 8,000. So we will debit it here. We debit here by 8,000. You got the point? 8,000. Okay, I will write it down the closing balance, but understand there's one more adjustment. They say in point number E, depreciation is to be provided. Is to be provided means we have not yet provided. We have to provide. So is to be provided on plant and machinery at 10% on what here? On cost. So on cost, not on WDV. If they mention in on WDV, then we have to charge a depreciation 760. But they say on cost, it means on the 770. So how much is the 10% of 770? That will come here. Just give me a minute. Yeah. Wait. One thing, that if they tell you that here on WDV, please understand that here. This is the cost only. This is not a WDV by mistake. I said that this is not WDV. This is cost only. This is cost only. The reason is that these you have sold the asset of 10,000. We've sold the asset whose original cost was 10. That now we sold it that here. So basically, for the remaining asset, the cost was 760, and this is the amount of depreciation 172 minus 8. That is coming 164. Okay, so if they tell you to charge the depreciation on WDV, so 760 is the cost. Then whatever is the provision for depreciation, if you deduct it, whatever value comes, that is WDV. On that, we have to charge us 10%. If they ask you, if they tell you that here, the 10% on cost they say, if they mention in question 10% of WDV. So what I will do that here, this cost, I will minus here accumulated depreciation. That is 172 minus 8. That is accumulated depreciation. Whatever value comes, that is WDV. On that amount, we have to charge the depreciation for current year. But they have not mentioned you that. They make it simple for you. They say to charge it on the original cost. The original cost is 760 only. Okay, not 770. 770 was the original cost for all the assets. But out of that, we sold some asset whose cost was 10. So what is the cost on the remaining asset that we hold? That is 760. So here, I will write it down here now, plus 76. Now you will ask me, sir, how you calculated and why you added there? I always love to go to the basics of accounting. So what is the original cost that we have? A 760 multiplied by 10%. That is coming how much is 76 that is. Okay, correct. Now for this, we are going to pass the entry here. Depreciation account should be debited here. That is 76, and we are going to credit to provision for depreciation account. That is 76. Where this depreciation will go? It will go to P&L. So one effect we will give, we will write it down in profit and loss account, this 76 as depreciation. This is the depreciation for the current year. This is depreciation for the current year we're talking about. Okay. And the second effect, we are not crediting to PPE. Basically, we are maintaining a provision for depreciation account. So what we'll do that, we'll credit to the provision for depreciation. It means we are increasing the provision for depreciation account. So we add it there. Okay. Now, how much the balance is coming in outer column? If you go to the outer column that here, now how much is the balance is coming? 172 minus 8 plus 76, that is coming 240. The balance which is coming in outer column, that is coming how much? 240. So now, where we will cross check it whether the balance is coming in provision for depreciation is 240. We can see that we credited to provision for depreciation account by 76. If I credit to 76, if you see the balance here, how much is the balance is coming? 172 plus 76 minus 8. That is coming how much? 240. So if we cross check it that here, now 240 is the balance, here it is coming 240. You got the point here? So try to connect it with these accounts, debit and credit that here. Okay. And one more thing, if you are doing these C intermediate after your graduation, I strongly recommend please watch the series of the basics of accounting. Here you will get the access of that here. Okay. Okay. Now here that is coming, but don't forget to write it down, this depreciation in P&L account. So go to P&L account and write it down. Go to P&L account. You can see the depreciation there. Write down this depreciation there, 76 there. Okay, done. So we have covered all the adjustment. Now we have to do the total of notes to account. First, we will do the total of notes to account of this P&L account item. 60 plus 30 plus 30, that will come 120. So write down this 120 as other expenses in P&L account. So write it down, these other expenses 120. Okay. There's no employee benefit. How the company is running without employees? Okay. Anyways, 700 plus 2, 702 expense 320 plus 20. Okay. Okay. Wait. We don't have an employee benefit expense. Okay. 320 plus 20 plus 76 plus 120. That is coming how much? 536. So here we have point number 3 minus point number 4. That is here 702 minus 536. So 702 minus 536. That is coming 168. There is no tax here, so the provision for tax 166. Where this 166 will go? It will go to reserve and surplus. So go and write it down in reserve and surplus. That is profit for the year 166. So here profit for the year is coming how much? 166. Okay. Now we'll do the total of all notes to account. The first notes to account is single figure, that is 300. So write it down, share capital 300. Okay. Then here is 72 plus 166, that is coming 238 minus 18, that is coming 220. So 130 plus 130 plus 220 plus 40, 130 plus 220 plus 40 plus 140. That is coming how much? That is coming 530. So write down this 530 there. Okay, 530 here in balance sheet, 530. Okay, then we have here notes to account number 3, one figure only 200. Okay, no short term borrow. Okay, PP, how much that they have? PP. Okay, the PP that they have here in outer column, write down these first, these figure of P, this plant in my 760 minus 240, that is their 520 plus 360, that is coming 880. 880. Okay, 880. Now do the total here, 300 plus 530 plus 200 plus 52, that is coming 1082. 1082. 880 plus 86 plus 96 plus 20, 1082. Okay, done. So we're done with this question number 8. Only the one thing which is important here that we discuss about it is coming 1082. Okay, let me do the revision here for you. Okay, we'll do the revision. Now, what is the correct entry when we sell the asset? First of all, the cost of the asset was 10,000. Accumulated depreciation on it was 8,000. So value it was 2,000. We sold at 4,000. So we make a profit of how much here? 2,000. Okay. What is the correct entry when we sell it? Bank account should be debited by 4 because we sold at 4. The value of the plant and machinery was 2. So credit the plant and machinery by 2. And here the profit will come in P&L. But what entry they pass? They pass the entry bank account debited by 4 and the suspense account they credited. Okay, because the cash represent the suspense account that they have received. Okay, suspense account basically receive the cash that they have received. So bank account cash or bank account debit, suspense account should be credited. Now we have to do the rectified entry to correct that error that they have done. So bank should be debited and they have debited the bank. So no problem. Plant and machinery they have to credit, but they have not credited. So we are going to credit to plant and machinery. The profit on sale should be credited, but they have not credited. So we will credit them and they credited the suspense account, that should be cancelled. And we are debit to what? We will debit to the suspense account here. Okay, you got the point here. They will debit to the suspense account here. So suspense account which is appearing in trial balance was 4,000 credit balance. Now when you will debit it, the suspense account will get cancelled. That's why we have not write it down in our financial statement in balance sheet P&L. Okay. The plant and machinery should be credited. So we credit it to, we deduct from the plant and machinery, and profit we write it down as other income. But whenever we sell the asset, that if we maintain a provision for depreciation account, whatever depreciation we have charged till that date, that has to be transferred from provision for depreciation account to a plant and machinery. So you will see that here now, that provision for depreciation debited and plant and machinery should be credited. So if you go here, we deduct from it the plant, we deduct this 8 here and we add here. Okay, and here you got the point. Add means here we are going to deduct from the plant and machinery the total. 2 is the when we profit time, at the time of profit that here now the WDV was 2,000. At the time of sale the WDV was 2,000. That's why we reduce the value, because we WD we have to cancel it, and also the accumulated depreciation we have to cancel. So we cancel these two and then we cancel this 8 as well. This is how we do the accounting when we sell the asset and we maintain an accumulated depreciation account. Now, in question number, now we'll solve question number 8. But you know what happened in question number 8? Almost same. One and adjustment might be here and there, but almost 80% is same that year. But they are this examination question, but they ask you to prepare only P&L account, not balance sheet. So intentionally I solved question number 8 first, because in question number 8 we prepared what? We prepared the balance sheet as well. So when we prepare P&L account and balance sheet, you will get the totality. Idea in a totality, what is the total effect? Totality, you can see that what are the effects are coming. But when they ask you only to prepare the P&L account only, so you might get confused that okay, what is the effect? Other effect will come. So that's why solve question number 8 first. Now you know that what are the effect of the suspense account, where it will go and all that. Now we'll solve a question only where we have to prepare what? Only the profit and the loss account. Only we have to prepare the profit and loss account. Okay. Now what we'll do that here now, it's a little bit heavy, not a heavy question that here. Okay. Now we'll take a break for 10 minutes and then we'll solve question number 7. Okay. Now break for 10 minutes. Hello, all of you. Now come to question number 7. It came in May 2023 examination. Okay. Now the following balances are extracted from the books of Travesa Limited as on 31st of March 2023. So 7% debenture 48 lakh 45,000. Then plant and machinery at cost 37 lakh 43,400. Trade receivable 35 lakh 70,000. Land 97 lakh 37,000. Debenture interest 3 lakh 39,150. Bank interest 13,250. Sales 47 lakh 22,600. Transfer fees 38,250. Discount received 66,200. Purchases 28 lakh 86,600. Inventories here 4 lakh 97,250. Factory expenses 2 lakh 58,060. Rates, taxes and insurance 65,025. Repairs 1 lakh 49,685. Sundry expenses 1 lakh 27,500. Selling expenses 26,520 here. Directors fees is 38,250. Interest on investment for the year 22-23 coming 55,000. Provision for depreciation 5,96,700. Miscellaneous received 1,42,800. Now additional information. Okay, additional information is closing stock on 31st March 2023 is rupees 4,76,850. Miscellaneous receipt represent cash received from the sale of plant on 1st of April 22. The cost of the plant was rupees 1,65,750 and the accumulated depreciation thereon is rupees 24,865. The land is revalued at rupees 1 crore 8,63,000. Depreciation is to be provided in plant and machinery at 10% per annum on cost. Make a provision for income tax at the rate 25%. The last one, that is the board of directors declared a dividend of 10% equity shares on 4th of April 2023. Now here is they ask you that you're required to prepare the statement of profit and loss as per the schedule. Okay, profit and loss as per the Schedule 3 of the Companies Act 2013 for the year ended 31st March 2023. Ignore the previous year figure. What is previous year figure? In real life, what happened? We give the figures of the current year as well as for the previous year for the purpose of comparison. Obviously, we'll ignore here. We don't have any figures of the previous year. Okay. Anyways, but they ask you only to prepare what? Profit and loss account. But be careful when we'll prepare when we solve the question. They have given so many items of balance sheet also here in the trial balance. We just have to ignore those items. Okay, we just have to ignore those items. Only item which is relevant for me for that is going to give me effect. That is going to effect is going to come in profit and loss account. We will take into consideration only those items. Okay. Now the question arises: which notes to account we have to prepare? Obviously, when we talk about the P&L account, we are going to prepare other expenses that is which is mandatory. Like in case of a balance sheet, mandatory share capital, reserve and surplus, long-term borrowing, and property, plant and equipment. Here we are going to prepare the notes to account other expenses. But anything other than the other expenses we should prepare. I believe that here we can prepare on other expenses. Correct? Okay, other expenses. Let me write it down here. Other expenses. As you can see that here now, here interest, yeah, there are two types of interest. There is the interest on the debenture interest. This is a debenture interest, and we have a bank interest also. So we can prepare on the finance cost also. Okay. Not necessary what I'm talking about now, because in the previous question when we solve, there's a profit on sale of that plant and machinery which we write it on directly in a P&L account. But here what happened? There might here the same adjustment comes here. Might be they have a profit here, and but there are so many items of other income here. The transfer fees, discount received that here. So we'll make a one notes to account on other income as well. So there are three notes to account. Why I prepare on the other income? Because of these items. Okay. And here on why on the finance cost? Because it is mentioned two type of interest: interest on debenture and the bank interest. We have taken a loan and then we are paying interest on that. Bank interest they have written on the debit side. It's an expense, not an income. Okay. So simple. So we'll draw a statement of profit and loss account. This is question number 7. Write down there question number 7. Okay, Trevisa Limited. Part 2, which is statement of profit and loss for the year ended 31st of March 2023. Okay. Now draw this for half page. Okay. Note and the amount. Note and amount. Write down here first. Revenue from operation. Revenue from operation. That is other income. Then we have here is total revenue. Total revenue. Then we have a fourth point here, expenses. That is a cost of material consumed. Purchase. Change in inventory. Change in inventories of finished goods, work in progress, and stock in trade. Okay. Write down and stock in trade. Then here employee benefit expense. Employee benefit expenses. Then finance cost, depreciation and amortization. Expenses. Then we have other expenses. Okay. Then total of the here we'll do the expenses, total expenses. Total expenses. Okay. Then here fifth is profit before tax. Point number 3 minus point number 4. Okay. Then we have provision for tax. Provision for tax. Then we have profit after tax. Okay, profit after tax there. Okay. Then here write a notes to account. Notes to account we have to prepare on other income. And then on we decided on finance cost and on other expenses. Okay, now write down your notes to account. No balance sheet, no notes to account, share capital and all that. They ask you just to prepare P&L account. So notes to account. notes to account. Number one, other income. Keep the space of 5-6 lines. Okay, then here, second, finance cost. Give the space of 3-4 lines. Other expenses. Keep the space of, because one working note also we are going to prepare that here now. Okay, and okay, notes, so you have written this here. Okay, we after this keep the space of these other expenses. That okay, it's okay, we'll write it on working note later on that here. Okay, done. So we have prepared the trial, and we have prepared the profit and loss account, which is given in the which they ask you to prepare in the question. Okay, now just give me a minute that now. Just 1 minute. Okay, now here, what we'll do that we'll take one by one item, but be careful that they ask me just to prepare the P&L account. Okay, not balance sheet. So we'll ignore the balance sheet item. Okay, we are just going to take the item of profit and loss account. Okay. First is you can see the 7% debenture. Okay, so debenture is a balance sheet item. So they ask you just to prepare what? Profit and loss. So it is a balance sheet item, so we will not write it down. Okay. Now they say plant and machinery. This is also a balance sheet item, but depreciation will come. When the depreciation will come, we'll do the calculation. Okay, but this is also a balance sheet item. This will not write it down. Only the depreciation will come. Trade receivable is also a balance sheet item. Okay, then here trade receivable is also a balance sheet item. Then we have a land is also a balance sheet item. Okay. Now understand, this is debenture interest. It's a finance cost. But one thing you have to cross check it in your examination as well. How much is the amount of depreciation we have? How much the amount of these debenture we have? There is 48,45,000. So if I write it down here, 48,45,000. Understand this one. What is the rate of interest on debenture? Rate of interest on debenture is 7%. So how much interest they give? They give the 7%. So if I multiply by 7%, how much it will come here? 48,45,000 multiplied by 7%. That is coming here. How much here? It is coming 3,39,150. You can see the exact amount, 3,39,150, 3,39,150. So if suppose it is coming something else that, okay, suppose it is coming, let's say 3 lakh coming, it is only, suppose how much is the amount of interest which is appearing is 3,39,150. An actual amount of interest should also be 3,39,150. Suppose here, hypothetically, suppose here it is coming 3 lakh only. So what you will do that in that case here? So you have to add in that case 39,150 because we follow accrual system of accounting. So even though we have paid suppose 3 lakhs, so remaining we have to write it down because we follow accrual system of accounting. Okay. So but it is coming exact amount, so no need to do anything. Just we have to write it down this 3,39,150 in profit and loss account. So go to P&L account, the finance cost. Whether we have, we prepare a notes to account on finance cost. So write down there now is the debenture interest. Debenture interest. Okay, write down there 3,39,150. Okay, 3,39,150. Then we have here, okay, 3,39,150. Okay, so this is P&L account. Then we have here bank interest. This is also finance cost. This is also finance cost. This is also finance cost. Okay. Now finance cost 13,250. So we'll write it down here now is bank interest 13,260. Okay, 13,260. Then we have here is the sales revenue from operation 47,22,600. So 47,22,600. Okay, 22,600. Okay. Then we have here is the transfer fees is other income 38,250. So other income, write down the transfer fees. Transfer fees is 38,250. Then we have discount receipt, not dividend, sorry, discount receipt. This is also other income P&L 66,300. Okay, discount received. Okay, then we have purchase. So it will purchase will come. Okay, purchase P&L account 28 lakh 68,600. Here they have not given adjusted, but normal the figure they have given 28 lakh 86,600. So we'll write it down in P&L 28 lakh 86,600. Okay, 28 lakh 86,600. Then we have inventory. It's an opening stock. It's the opening stock. So how we write it down? We write it down in change in inventory. Okay, change in inventory. That is 4,97,250. So we'll write it down in inner column here. Opening stock. The closing stock when come, we'll write it. We will deduct from here. Okay. So 4,97,250. We'll deduct closing stock from it. Okay. Later on when the closing stock point will come. Now here, sorry, other factory expense will come in. Other expense will be 2,58,60. So here, write on here other expenses, factory expenses. Factory expenses. So 2,58,060. Okay. Then here we have rates, taxes, and insurance. Oh, I have written in other income. Sorry, it's other expense. Okay, I have by mistake I say other income, other expense. Okay, rates, and taxes is also other expense. 65,025. So rates, taxes, and insurance. 65,025. Okay, repairs, other expenses 1,49,685. So write down there is repairs 1,49,685. 1,49,685. So write down there now repairs 1,49,685. So now we have sundry expense is also other expenses. So we will write it down sundry expense 1,27,500. So write down here sundry expenses 1,27,500. Okay. Then we have selling expenses is what? Other expenses 26,520. 26,520. That is coming here. Selling expenses. Then we have director's fees is also other expenses. That is 38,250. So director's fees 38,250. Done. Have you written all these? Okay. Now after director expenses, we have what? Interest on investment. So we have done the investment. We are receiving interest for that. So this income, remember that this is income. It will come in other income. Okay. That is 55,000. So we have prepared notes to account on that also. Yes. Notes to account number 1. Interest on investment. We are receiving interest on investment. So this is income. So investment, interest on investment. How much it is? That is coming 55,000. How much it is? 55,000. Okay. Then we have here provision for depreciation. It's a balance sheet item. So we will not write it down because we are preparing only profit and loss account. Okay. Then we have here miscellaneous receipt. Do you remember that in our previous question, sometimes they give you as a miscellaneous receipt and sometimes they give as a suspense account. Okay, but the adjustment is the same. So we'll discuss about this 140 to 800. Okay, now the closing stock that they have given in adjustment here. The closing inventory on 31st March 2023 is rupees 4,76,850. So it's a closing stock account will be debited here. Okay, closing stock account will be debited here. Okay, and we'll write it down in closing stock account will be debited. That will come in balance sheet, and we'll write it down here to profit and loss. Basically, we write it down in change in inventory. So when I say profit and loss account, it basically deducted from change in inventory. So here This 4,76,850. This is what the closing stock that we have. Okay. So closing stock, we write it down in balance sheet. So we are not preparing here balance sheet. Okay. So it will not write it obviously because we are not preparing balance sheet here. Sorry. Now we have here is the 4,76,850, which is the closing stock that we have. So we have to deduct from the change in inventory from opening stock. So go to P&L account, write it down there in a P&L account. We'll write it down here how much it is. 476,850. 476,850. 476,850. Okay. So 4,97,250 minus 476,850. How much it is? It is coming 20,400. Okay, write down there 20,400. Okay. Then here, this is same adjustment. Okay, if you want, I can write it down for you as well, like I have done in the previous question. Okay, they say miscellaneous receipt represent the cash received. Okay, miscellaneous receipt. They say miscellaneous receipt represent the cash received. Okay, represent the cash received from the sale of the plant on 1st of April 22. It means at the starting of they sold some part of the plant, and the cost of the plant was rupees 165,750. And the accumulated depreciation means the provision for depreciation on that asset is rupees 24,865. So what we'll do that we'll calculate the written down value and we will compare it with the sale value. Here they say miscellaneous receipt represent the cash received from the sale of. So this miscellaneous receipt is 142,800. In previous question that we have solved that before the break, they have mentioned here 4,000. But that 4,000 was talking about the suspense account. Here they are talking about here they have not written here, but they have clearly mentioned that they are talking about this miscellaneous receipt 142,800. Okay, so what we'll do that now we'll make a write up these below the director's expense. Keep the space of 2-3 lines. Then write on working note. Write down their working note. Write down their working note. First, profit on sale of plant and machinery on 1st of April 22. On 1st of April 22. Okay. Now write down there what the cost of the plant and machinery that they sold. Cost of plant and machinery. That is coming how much? Cost of plant and machinery is mentioned how much? 142,800. So here 1,42,800. Okay. Then we have here what is the accumulated? Sorry. The cost is not 140. Cost is 165. That is the sale value. Okay. Do the correction there now. Is sale value is something else. That is sales value is 165,750. It is a 165,750. Okay. 1,65,750. Okay, there's the cost of plant and machinery when we are accumulated depreciation. So let's accumulated depreciation, which is how much here? 24,865. So 24,865. This is accumulated depreciation. So WDV will come written down value on 1st of April 22. So 1,65,750 minus 24,865. Okay. So written down value is coming 1,40,885. Now we have to compare it with the sales value. We sold at what price? This miscellaneous receipt represent the cash received on sale of plant 142,800. So 142,800 we sell at profit. So write it down there. Sale value. Okay, sale value is more. The sale value is 142,800. WD was 148,885. So basically we sold at a profit is 1915. Okay, 1915. The profit on sale of plant and machinery. Profit on sale of what? Plant and machinery 1915. You know that here where it will go? It will go to other income. other income. Okay, now we have to pass a rectified entry. Again, for your reference, I am writing in detail that now. Okay, now what is the correct entry? Correct entry when we sold these plant and machinery, the correct entry was cash or bank account should be debited here, because we sold at what price we sold it that year? We sold at 140 to 800. So 140 to 800. What is the book value they have? So to plant and machinery, what is the book value? 148.85. So 148.85. What is the profit that year? Is 1915. So 1915. So to profit and loss account. This is basically profit on sale of that plant. This is a correct entry. But what they have passed here, the wrong entry, or you can say the effect given. Okay, effect given, or you can say the wrong entry, incorrect entry that they have passed. Okay, they pass the entry. Bank account should be debited here too, but they have passed to miscellaneous receipt account. Okay, miscellaneous receipt. They have passed this entry. So here, bank 1,42,800, and you have to credit 1,42,800. Now this is the effect given. So first is the correct entry, second is the effect given, and third one is a rectified entry. A rectified entry. Okay, rectified entry. Now understand this point. Which account should be debited? Bank account should be debited here. Whether they have debited the bank account, the answer is yes, they have debited the bank account. So there is no problem in that. Now here the plant and machinery account should be credited, but they have not credited it. They have credited miscellaneous receipt. So we have to credit here plant and machinery to plant and machinery account. It is coming 1,40,885. Now here we have to credit to P&L account this other income, but they have not credited here. So we have to credit it to profit and loss account. Okay, this is a profit here. 1915. Then they have credited the miscellaneous receipt account. So to cancel it, what we have to do? We have to debit the miscellaneous receipt account. Okay, they have wrongly credited. We'll debit here miscellaneous receipt, something which we have credited wrongly to something, anything we have to do the cancellation, we have to give the reverse effect. So they have wrongly credited, so we have to cancel them, so we have to debit them. Miscellaneous receipt account should be debited 1,42,800. Okay, now if you think about what should be the treatment, do you remember that here, that miscellaneous receipt which is given in question trial balance? Okay, let me write it down here. Miscellaneous receipt account. Miscellaneous receipt account. Okay, let me write miscellaneous. How much is the miscellaneous receipt is mentioned? 140-800. So in 140-800 mentioned in trial balance. Now here we are debiting it. So my miscellaneous receipt account will get closed. Like in the previous question, the suspense account get closed. Okay, it get closed. We will not write it down anywhere. The plant and machinery account will be credited here, but we are not, these plant and machinery accounts should be credited, but we are not preparing here the balance sheet. So, but it will come in what? Other income. It will write it down. This is other income that here. Okay, for reference I have written, no need for this, but for reference I have prepared all this. Okay, now do you remember I told you that here? Just give me a minute. Okay, then we have here, now at the time of sale, what we have to do? That at the time of sale we have to cancel the accumulated depreciation that is on assets. So what entry do we, what is the accumulated depreciation is? 24,865. So we have to pass accumulated depreciation account should be debited here 24,865 to property plant, to this plant and machinery account. Okay, 24,865. Okay, but we are not here preparing balance sheet, because this will come where? It will come here. It will come here in balance sheet, where all these items will come. These are the item of balance sheet. So we are not preparing balance sheet, please understand. Okay, but we have to think in totality. Similar question we have solved earlier also. Okay, Just we have to write it down this in other income. Okay, go to other income, notes to account number 1 and write it down this 1915. Okay. So here profit on, write down there, profit on sale of plant and machinery. Working note number 1, 1915. Okay, done. Now, third point, again, we have discussed in our previous question that here land is revalued at rupees 1 crore 8 lakh 63. What is the value of land is appearing here? Land is appearing at 97 lakh 37,000. So we have to, again, that this item, no need to write it down because we pass the entry. Increase in assets should be debited. The land account should be debited and revaluation reserve. Both will come as a part of balance sheet. So we'll not write this item of balance sheet. We'll not do that. Okay. Depreciation is to be provided on plant and machinery. So this will come because depreciation we write it down in our P&L account. Okay. So we'll write it down depreciation on cost. So please understand that here the value we have of the asset at the starting year, the asset that we have sold, their cost was 165,750. So the plant and machinery which is mentioned that the original cost, that is 37,43,400. Out of that we have sold something. So obviously we sold at the starting of the year which is mentioned in the question. So there is no depreciation on that. On the remaining asset we have to charge the depreciation. So go to the P&L account. Write down there in depreciation column. Okay, write down there in depreciation column that here how much is the value is appearing there, that is 37,43,400. Out of this, okay, 43 lakh for 37 lakh 43,400. Okay, but we sold, okay, but we sold that here some, and we sold at what is the cost of that? 165,750. So 165,750. On remaining, we are going to charge what? 10%. Okay, so 37 lakh 43,400 was original cost. The cost of the asset we sold 165,750. On the remaining, multiply by 10%. That is coming how much here? 3,57,765. So 3,57,765. Done. Okay. Now make a provision for 25% on tax. Okay, so for income tax 25%. We'll find it out the profit. We'll make a 25% tax on that. Okay, but last point is related to that dividend they declare on the that board of directors declared a dividend on of 10% on equity on 4th of April 2023. So balance sheet is of 31st March. So where it will come? Only the notes we have to mention. Okay, so we'll make a first the provision for tax, but we have to find it the profit for that. So do the total one by one. 38,250 plus 66,300 plus 55,000 plus 1915. That is coming here 1,61,465. So 1,61,465. Okay. There is no cost of material consumed. Change in inventory we have written there. Okay. Now finance cost here. Okay. Finance cost 3,39,150 plus 13,260. That is coming here. How much is 3,52,410? 3,52,410. Then we have here 2,58,060, 65,025 plus 1,49,685 plus 1,27,500, 26 to 26. 520, 38, 250. That is coming 6,65,040. Write down properly this 6,65,040. So 6,65,040. Now do the total of these income and expense. 47,22,600 plus 1,61,465. 48,84,065. 28,86,600 plus 20,400, 3,52,410, 3,57,765. 28,86,600, 20,400, 3,52,410, 3,57,765, 665,040. Okay, 42,82,215. Okay, so income minus expense profit. That is coming here 48 lakh 84,065 minus 42 lakh 82,215. So that is coming here 60,000. No, not 60,000. 6 lakh 1,850. Okay, how much is the rate of tax is mentioned better? That is here 25%. So here 6 lakh 1,850 multiply by how much it is? 25%. 25%. Okay, 6 lakh 1,850 multiply by 25%. Okay, that is coming here 1 lakh 50,463. Okay, I round it off. That is coming 462.5. So I'm writing 63. So yes, 6 lakh 1,850 minus 150,463. So that is coming here 4 lakh 51,000. 4,51,387. Okay, done. We don't have to prepare balance sheet. Okay, so we are done with the question number 7. Okay, now today only only these two questions I'm giving homework now. Okay, we're done with the question number 7 now. Okay, now question number 7 done, question number 8 done. Okay, 9. Okay, now understand what we have to do that now here. The homework here. Okay, now for today you have a homework of, okay, now write down there, we have a home. Okay, write down there homework. I will explain you the homework. Okay, homework, you have here question number is 18 is homework today, and the same the question that we have solved, almost the same. Okay, but there are some more adjustment here, but all adjustment we have covered in class, like the authorized, revaluation, equity share other than cash consideration. This is the same point that we discussed in class, of the suspense account. Okay, then your depreciation, that, okay, balance with the which is not a scheduled bank, income tax. Good question. Okay, more than 6 1 point. So question number 18 is homework, and this type of question come for 14 marks in exam. And question number 19 is also homework. Question number 19 is almost similar to question that we solved in class today. Okay, no, wait, one interesting point. If this is provision is okay on cost, this is also okay. Then the director 5 is also okay. Now understand this. These are explaining that they declare the dividend 5th of April. Oh, I have not written that point now. Okay, we'll write it down, this point, one point here. Okay, just give me a minute. Let me first write it down the homework. Stick in here. Just 1 minute. Okay, now here these point is okay, but they also transfer the profit 10% to general reserve. When they say profit of the current year always, okay, they say, even though they have not mentioned, they're talking the profit of the current year. Here they're mentioning the percentage. We have solved similar question earlier also. So you will see a reserve and surplus. What they have done there in reserve and surplus, you will see that they have transferred to these. You can see that they transfer the 10% of the current year profit. This is 10% of this. Okay, and to what they have done that here, they have 10% of the profit, so they will add to this here P&L. Okay, bad. In general reserve, they say to general reserve they will add. Sorry. Now this is okay. The revaluation, authorized capital. Okay, now understand, this is new for you. Let me explain you this. On 31st of March, the company issued bonus share to the shareholder 1:2 basis. 1 equity share issued as bonus for every 2 equity share held. No entry relating to this has yet been made. So we have not yet covered a chapter that is a buyback of shares. Basically, bonus share is not in a C intermediate level. It is not a foundation level, but I covered the entry of the investment, the bonus shares also in a buyback of security chapter. So what is going to happen here now? Understand the entry, very simple, don't worry. First of all, they're giving they have not yet passed one entry of bonus shares. For your reference, I'm explaining you, just write it down. Bonus shares issued. Give the heading bonus shares issued. Now what happened? Whenever we issue the shares, first of all, we pass entry. Normal when we issue the shares in the market, we pass entry cash or bank account should be debited. and share capital will be increased. So we credit to share capital account. So cash or bank account will be debited here and share capital account will be credited here. Now please understand this here. So how much for, I will tell you the bank account will not come here. What happened in case of a bonus share? Normally this entry we pass with. Bank cash or bank account should be debited and share capital account should be credited. Normally this entry we pass, okay? But what happened is that here now, we are not issuing the shares in the market, we are issuing the bonus share. So bonus share is free of cost. So I cannot debit to bank account or cash account because we are not receiving the amount from shareholder. Something should be debited. So we debit to reserve and surplus. Okay. So generally we debit to general reserve, profit and loss account. But what is the amount for that? So for every 2 share, 1 is the bonus share. So we have a share capital of how much? 200. So you can say for every 2, 1. So divide by 2, multiply by 1, that will come 100. So I will say 100 should be debited, capital should be credited by 100. But what should be debited? So which reserve that they have utilized? You can see that here they have utilized for the purpose of bonus shares. Okay, why the 20 bonus shares? Just give me a minute. Utilized for bonus issues coming 27 only. Okay. 27 here and here. Okay. Now total is 100 only, but they have utilized the securities premium account. No, not securities premium. Okay, but they have utilized this securities premium account. Anyway, they have utilized it. So okay that here, but it is not recommended to utilize the securities premium account for that. Okay, I will tell you, but it's okay that here. They utilize the securities premium account 27, and they have utilized the general is the 73 that is. But okay, it's okay if institute have done it that year. They have from okay. Now understand. Let me tell you the logic here. What entry should we pass that here? But when we issue here, we have to debit to reserve here because we cannot debit to bank account. Can we debit to bank account here? No, we cannot debit to bank account because we have not received the amount. Okay. So when we issue the shares free of cost, when I say bonus shares, we are issuing free of cost. So when I say we are issuing free of cost, we are not going to receive any amount that here. So shares issued, but something should be debited to be adjusted against the profit. That is the reserve. So which reserve? So let me tell you honestly that is generally when we issue the bonus shares, we utilize the what we call them here, the profit and loss account balance or general reserve balance. Okay, it is not recommended to utilize the securities premium, but they have done it, no problem. So to these 100, they have basically adjusted 23 here in the here they have deducted this 23 here, 27 sorry in the securities premium account, and the remaining 73 total if you do that will come 100 only. Okay, but even if alternatively someone do the adjustment of 100, 90 from the general reserve, 10 from these profit and loss account, that is also okay. That is also okay. Nothing wrong in that. Okay, if someone also adjusts the complete amount of 100 from these okay. They have write it down. Okay, profit there. Okay, if someone correct. If someone done the adjustment of 100 complete from the profit, because they have a balance here is coming 111.6. If someone do the adjustment 100 from this amount, that is also okay. So that reserve and surplus can be adjusted from profit and loss account balance. It can be adjusted from general reserve, but it is not recommended to utilize the securities premium. This is what exactly IC has done. That is also correct, but not recommended that. I will tell you in the next chapter, but it's okay. If alternatively, suppose when you will solve the question, suppose if you do that here, instead of adjusting here, if you deduct complete 100 from here, it's okay. If you deduct 90, it's 90 because they have the balance of 90 here and 10 from profit and loss account, that is also okay. Okay. So, but it's okay. We have the choice, but they have not specifically mentioned that which should be utilized. Okay, no. So they have not passed the entry. So we have to pass the entry. So this entry we pass. So this reserve will be debited, will cancel and capital should be increased. So you will see that in a share capital, they have increased the capital by 100. So here they have deducted that here. They have deducted here 27 and 73. They reduce the profit that here, reserve, and they increase the capital here. You got the point here now? They've issued that here. So you have to mention that 10,000 bonus shares were issued during the year. Okay, whatever number of shares, okay, that we have to mention here. And this amount is other than cash consideration, but we have issued during the year. Obviously, we have to add here. Okay, done. This is a new point for you. All other are same. So I gave you the homework for 2 questions. That is question number 18 and 19. And then I explain you both question number 18 and 19. Okay. Now do one thing that here now. Just you have to write it down. This one note here. Okay. One note here. All on. And you remember this point that here now. The question that we have solved in class. That is question number 7 that here. Okay. Question number 7. So in question number 7, that is first is related to closing stock, then miscellaneous receipt. Remember that we are not preparing here balance sheet. So all the item of balance sheet, obviously we have not recorded there. Okay. Now write down this 6 point, that is okay. And this also land, where it will come. It will come in balance sheet. We discussed in a previous question. The land will be increased and the revaluation surplus will come, but that will come under in balance sheet, both the item. So here they have given the value how much here. They want to come to this value. What is the value appearing here? This is a value which is appearing here. Land, this 97,37,000. Here it is coming 1,08,63,000. So we have to increase the value. So that will come in land account will be debited, revaluation reserve account will be credited. But we are not preparing balance sheet. That's why we will not record it. Okay. Now for a reference, you can write it. Okay, let me write it down for a reference. Okay, write down one thing. This point was related to point number 2, which is mentioned in question, for your reference. Okay, beta, for your reference. I always want to explain you in detail that. Okay, and do one thing that now. Okay, for your reference, I'm writing it down something. Just you also have to write it down. Okay, this we have here. We have a write down there. Land is book value here is coming 97,37,000. Okay, now they want to do the revaluation at what price? 1,08,63,000. Okay, so they want to increase the value. How much is the difference? 1,08,63,000 minus 97,37,000. So here it is coming. That is here 11,26,000. Okay, so what entry do we have to pass for it? Land account debit. Land account debit 11,26,000 to revaluation reserve account 11,26,000. Okay, so where it will come that? Okay, where it will come? It will come here. Property, plant and equipment. This will come under reserve and surplus. So where this property, plant and equipment? This is a balance sheet item. This is also a balance sheet item. But we are preparing only here profit. We are preparing on the profit and loss account. Okay, so it will not come. So this is just for a reference. So for a reference, let me write it down that here. Now this is point number 3. Point number 3. Okay, and this is point number 2 here. Okay, done. Now write down that note on the final dividend. Okay, note. Write down the dividend declared. Dividend declared. Okay, final dividend declared after the balance sheet date, after the balance sheet date, but before the approval of financial statement are not recognized on the balance sheet. Okay, they will only be recognized when approval when only be recognized when approved in the subsequent period. So subsequent period in question, that is 2023-24. Okay, and their disclosure will be made in the notes for the current year, that is 22 and 23, that is a balance sheet on 31st March 23. Okay, as per accounting standard. Okay, so we are done with the question number 7 and 8 that we have solved today, and I gave you the 2 homework. And one thing is very important. Okay, I hope you understand that here, because you need to do the practice for it, which is very important that here. Okay, what it might happen when you will solve these 2 questions that I've given, homework question 18 and 19. When you will solve it, might happen certain time you will stuck in some point. Oh, then you will see the answer. Oh, click, then the point will click to it. It's okay. It's okay, but what is important, you have to do the practice. Okay, and it might happen in one time, in one shot, it will not give you the correct. It might be happening in one at first time only you have to solve it properly, but it needs a practice that. Okay, so don't worry if you stuck somewhere, but try to think that why the problem, why you have done some mistake, what are the area that we have basically misinterpreted the question, or some wrong amount you have written, the calculation mistake, whatever is that here, try to analyze them. Okay, so for today you have a homework question number 18 and 19. You all know, if you have any doubt, you can connect me with in Telegram. You can drop me a message anytime. Okay, so that is for today, because your target is to score how much? 80 plus in advanced accounting. That, and I'm telling you that it is going to, you have to really work hard, and you can score 80 plus account. We both will work together. Okay, and our target is you should score the 80 plus in advanced accounting. But I recommend that here, if you are doing this C intermediate course after the graduation, please watch the revision, these not revisions that later on you will watch the basics of accounting. Okay, so that is for today. Take care of you. Bye bye.